Hello, everyone, and welcome back to yet another episode of the Velocity Channel. What I want you to do right now is I want you to remember this, okay? If you are making above, income, that means positive income, not negative cash flow. Velocity Banking will work for you. Even if you're making negative cash flow, Velocity Banking will work for you, as we are about to find out, and we have found out in other past videos where we're going to attack it from another angle. And before we get right into that, I want you to do this: like, share, and subscribe, because the economies of the world need what I'm going to teach you right now. Now listen, I heard you, and I'm getting right into it. How about that? How about we're just gonna get right into it? Somebody wrote me the other day. Now watch this. I'm gonna wave at you. That's a code, right? I know. I'm famous for anonymity. $1,200 each month. Each month, okay? Huh? Now what's that fading, right? That fading, that's the $1,200 a month, and it may be $900 a month, right? And now they say, but my debt is 31K. Okay, my debt is 31K. What in the world? How, CJ, does Velocity Banking work for me when now let's just do the math. $1,200 a month is what? A year. Isn't that like $14,400? So let's go ahead and write it all out. Remember the math teacher? The math teacher was like, you got to write out the problem. Okay? Now, coincidentally, I know a lot of you don't know this, but I hated word problems growing up. Who knew that I would make it my career? Sometimes that is how things go. I hated them. I still hate them, except when you're talking about Velocity Banking, the math that we should have learned in school. So it's $14,400 each year, but my debt is 31K. CJ, how am I going to get this debt paid? Well, listen. You got a mortgage, don't you? Oh, you already know where I'm going with it. But listen, have you ever heard of a home equity line of credit? Have you ever heard of lines of credit? Have you ever heard of business lines of credit? Have you ever heard of business HELOC? Have you ever heard that you have to spend money to make money? Sometimes that's true, right? Not all the time, right? Okay. But in this scenario, when you don't have anything, sometimes you got to dig even further. Why? Because as I explained in the other video, this is a debt economy. And sometimes the way out of debt is the way into more debt, so you can see yourself through the other side. This is what I mean. You've got 31K that you have to solve. You've got to solve that. Period. Okay? So what you need to do is you need to work on the principle of this 31K. Don't just keep throwing money and paying each month with your head down. So when you have a scenario like this, the best thing you could do is say, hey, can I put a couple $100 to the principal only? Somebody write that in the comments. The principal only. Because you see, the principal is the host, okay? And the interest is the tick or the parasite, all right? The bigger the principal, the bigger the interest. But the smaller the principal, the smaller the interest, okay? And CJ, what's the interest on this 31K loan? It doesn't matter what the interest is. Watch this. It could be, right there, watch this, 40% interest. Now, this is humongous, okay? Or it could be like that one loan I had, right? 109% interest a year. Absolutely, 109% interest. Paid it off quickly. Why? Velocity Banking. Okay, so guys, don't get nervous. A lot of people get nervous, all right? And just because I call you normal, cheddar cheese, right? And I'm speaking in code. I just want you guys to be anonymous, all right? Doesn't mean that I'm slamming you. A lot of people are normal. You've ever heard people say, well, these aren't the normal statistics. Listen, I don't think I'm talking to normal people, unless you've judged yourself normal. All right? If you judge yourself normal, then I have to agree with you. I'm not slamming you. All right? You're ordinary. Cool, man. If that's what you want to be. You're typical. Great. Right? You're normal. All right? You cut up your credit cards. You hate lines of credit. You don't want to get a loan for your business. You don't want to get a loan for your investing. Cool, man. Don't do it. All right? I'm not slamming you. I believe in you. and I believe you can go higher. 40% interest rate, okay? But watch this, because the 40% interest is on what? The 31K. But if you put just $200 to the principal, come on, just $200 to the principal, what's it going to do? It's going to knock it down. And watch this. This number is going to turn into a 2. I don't know what else the other numbers is. I didn't have time to calculate it, but it's going to turn into a 2. And now the 40 interest is on 29 something. You've got to get this. Now the interest is on 26 something. Do you get it? Do you get it? Now the interest is on 17, 14, 12, 10, 9, 8, 7, 6. You see what I'm saying? So start putting a chunk of money, doesn't matter how much, towards the principal so that, right, you can pay off the loan without putting yourself into even more debt. Now, for those of you who can hear it and you have a first lien HELOC, guess what you can do? Guess what you can do? You can actually go ahead and swallow up this 31K and have the HELOC take care of it. You can swallow the whole 31K up. It is possible. It is possible. For those of you who have lines of credit that are calculated by simple interest, not amortized, okay? Amortized is where the bank keeps on getting your money. It's one way, scheduled payments, one way. And it's calculated much differently than simple interest. But simple interest revolving account, you can pay, borrow, pay, borrow, pay, borrow. We call it transfer. Come on now. We call it transfer. And that's how it's done. Don't be afraid to call the loan company up and say, I'd like to pay with my credit card. Don't be afraid to call the loan company up and say, I'd like to pay with my line of credit. They may look at you crazy, but you already know why you do it. You're not like other people. Other people are broke, busted, and disgusted. Other people, they say, well, I got to rip up my leverage. Okay, that's what credit cards are. That's what lines of credit are. And that's okay. Some people are afraid of fire and don't touch it. Some people use fire to go to the moon. It all matters in what you think, okay, and how you play the game of life, how you want to calculate your finances. Now, of course, there is a tool that you can use to do all of this calculation for you, okay? I know, $14,400 a year versus the 31K. I know, you've been taught, hey, that's all you got. No, not if you have a HELOC. No, not if you have lines of credit. No, it's not all you have. You no longer have to cry. You no longer have to cry, man. Because now you know that you have something more than the $14,400. You have leverage, okay? Now, if you're a real estate investor, and yes, you can be a real estate investor making this. You can start out making that, absolutely. I recommend it, to be honest, okay? I believe you're responsible. I really do. I'm not going to hold your past against you. If you're a real estate investor, if you want to be a business owner, won't you just go ahead and call me? You know what? Don't be afraid of the loans. Like I said, we have all kinds of loans for all kinds of people. Why? Because we still have a freedom element. Because this still is the land of the free. Because it still is the land of opportunity, right? And so you have lots of opportunities to build up on, so you can make this, right? You can turn this into this. Is that possible? Yes, it is possible. We're doing it for others, right? And when you realize, hey, wait a minute, I actually have more than the 14, right? I actually have more, then you can do more with what you have. Remember the chunking principle, folks. It works even without a line of credit. Get with us. And thank you so much for watching. Thank you so much for liking, sharing, and subscribing. God bless you all, and you take care.